Greetings, my wonderful viewers. It's bright and sunny outside, and for the first time since October 2019, it's going to be above 20 degrees today. And that's a reason enough to cheer things up. For my update today, I'm going to be focusing primarily on the US economy. I'm going to be breaking it up into three main parts. In the first, I discussed the impact of COVID-19 on the US economy. Second, we'll go over the market returns for the month of April. And lastly, I'll share outlook going forward. So if we start with this graph, which is the number of new cases for COVID-19, the overall impression that you get looking at this graph is that the curve is flattening, especially in the US, which has been the epicenter for the spread of the virus for the last few weeks. The virus has taken a big toll on the US economy. The US economy shrunk by 5% in the first quarter, which is annualized 20%. And I don't even want to get into what Q2 is going to look like. And what that shrinkage has meant is record job losses and unemployment claims. Now it's expected that April will probably net out at 22 million jobless claims. Now if that number does not resonate, you just have to compare the size of the circles where it's compared to the previous jobless claims that were seen in the prior downturns. And you can see why this is so unprecedented, so off the charts, and why is it so severe. However, I don't think it's all bad news right now, because there is a silver lining. First, going back to the new cases graph, we see that there are success stories here. There is success we've seen in China, South Korea, New Zealand, Australia. So this virus can be controlled. Second, most of the US job losses are temporary in nature. So the moment the virus is contained, those jobs should come back online. And lastly, the data coming out of China is looking good. Now this might seem out of sync with the Western economies, but we have to remember that China is 6 to 8 weeks ahead of where we are right now. Second, let's look at the market returns for the month of April. Now going into this downturn, we had a record descent into the bear market. But April has been the best month for equities since January 1987, to the point that the market has recovered 50% of its losses. Now, while the market has shown a V-shaped recovery, the underlying economy is likely to show a U-shaped recovery. And how long or short that U is really depends on a number of factors, including our ability to develop herd immunity, a cure or a vaccine being found, and the adherence to social distancing and the other guidelines set out to contain the virus. But if I were to hazard a guess, I would think that the recovery of the remainder of the 50% is going to be a bumpy and a choppy ride. Which brings me to the last part of what I think would probably lead this charge for the ascent for the remainder of the 50%. Now, I think the US markets should do well going forward for the very factor that 40% of the US market is dependent on IT and healthcare, the two sectors that have done relatively well in this downturn and are likely to continue doing forward. Now, there is friction between the US and Chinese governments, and the Chinese might not be as supportive of the US dollar, and given the environment that we have had of low interest rates, this is an environment which should be supportive for gold. Now I'll be failing to, in my update, if I don't mention one thing which will probably be remembered and used by us for storytelling our kids and grandkids, was the day when the oil futures turned negative. Never in my educational career or for the prior life did I ever imagine I'll see anything traded negative on any kind of market. But that was what I think April 2020 will always be remembered for. So just to conclude, I like to say that past instances of double-digit market returns bode well for the equity returns in the subsequent months. However, COVID is unlike anything that we've seen before, so there might be twists and turns in how this story shapes up. But in my opinion, I think the worst is behind us, and we are probably another 12 to 15 months away from the pre-COVID market peaks. Stay safe, and thank you so much for watching. Bye for now.